What is up, everyone? Welcome back to another market recap. Guys, I'm back again for the third day in a row now, and you guys probably thought once again I was going to stop, but no, here I am. We are going to make these every single day, and I'm not going to stop. Guys, this is the start of a new era. Also, guys, get enough sleep because I'm not going to lie, I took a nap, just a super short nap because I was feeling so tired before I back tested to film this video. And guys, it makes so much of a difference. Like, if you're feeling burnout, I think one of the biggest ways to help prevent that is literally just take a nap or get enough sleep at night. It's easier said than done though, because I really don't have enough time to even get enough time to sleep. But if you guys can, I highly recommend it because it really makes you feel so much better. Guys, let's talk about the market today. So, we were at all-time highs, but then we came all the way back down. And you can see we perfectly run back down to our session lows. These are London and Asia. And this is all, what is this, right? This is all a giant consolidation. Now, let's talk about the first trade of the day that was obvious that everyone took. You guys probably know what I'm talking about. This V-shaped trade right here. So, this happens, I think, pretty early. Let's see. This was at 9:54, and believe it or not, I actually didn't take it because even though it's beautiful accumulation, manipulation, looks like distribution, higher time frames bullish, all that stuff, right? One, there is a 5-minute external gap, and so I was being careful of that. But the other thing is we are super far in premium, and to get good risk to reward on this, you have to target all the way up here, and it was just like, it was a little suspicious to me. Like, if I want to take even a 1-to-1, it's just, the RR just doesn't make sense to me. I just didn't feel like we were going to go, especially with this consolidation below. I don't know. Maybe it was just like a gut feeling. But I was also just worried about this 5-minute inversion. Now, I'm not going to say, like, it was necessarily wrong to take this. But it also, like, it was also the wrong draw on liquidity. Like, this was clearly the draw on liquidity, and we reversed. Now, there are a couple ways you could have handled this. Dodgy takes this, and he actually goes break even really, really fast. So you can see here, this inverses, and it's just one of those situations where if you're going to go, you shouldn't really hesitate here at all. And so he goes break even because he knows we shouldn't hesitate. And because we hesitate, he gets stopped at break even. But at the end of the day, guys, this is why I really try not to take the lower time frame inversions if there's a higher time frame gap, unless it is stupidly obvious that we're going to go run liquidity. And for me, I just couldn't get behind the fact that it, like, we're stupidly obvious we were going to run liquidity. So that's the main reason why I didn't take this trade. Now, there was an even better trade than that, believe it or not, that happened in the afternoon, and the legend himself in my Discord. It was such a good trade that I put it in the Discord trading channel, and the legend himself, FA, responds saying that was a nice trade. So if you guys don't know, FA, he is in my Discord. He's actually admin. And FA, he's this guy from, I don't even know. I don't know how to explain it. Like, I just met him like 8 months ago, I think. And he's from Russia, and he's 19. And he is like pulling tens of thousands of dollars from the market every single day. Like I don't have screenshots because I'm gonna have to go back like months, but he's sent screenshots where he's pulled like 10,000 plus days from the market, and he's from Russia, and he's only 19 years old, maybe 20. So this guy, FA, he's a legend. If you guys don't know FA, just legendary dude. Anyway, this was the trade. So I took a picture of it on my phone from my laptop, and wow, it was beautiful. Delivering from a higher time frame gap. So this was a BPR actually, because we had overlapping bullish and bearish for value gaps, and on the higher time frame, this you just have to conceptualize this. This is I think the 1 minute chart, but on the 3 minute, this is a very clean BPR, right? So then we sweep out this high, get SMT, and then get an aggressive displacement inversing this gap, and it just makes so much sense because of liquidity. I mean, this is, in my opinion, this is almost going to work every single time. When we inverse this 1 minute gap, because of liquidity, and the SMT and the BPR, we're almost always going to go run down to this low. So this trade was the trade of the day, in my opinion. I loved this trade. If you took this, good job. It was also going into the macro, so like 1050 until 11:10 is the macro. So, oh, and guys, I passed evaluation today for the first time in a while, so pretty happy about that. One day before my birthday, so that's pretty cool. But yeah, that's my 14th evaluation now that I passed, so that's pretty cool. So I can go show you the lower time frame. I can show you the screenshot I took. So, no, that's not it. Sorry. Here's this trade. The picture of it. You can see it better here. And it's just so clean. Like, this is a really, really good candle close. When we inverse this gap with SMT, we're essentially always going to go down to run. See, and because there's a whole bunch more price action down here, you just know, like, the market's going to at least go down to here. And this actually was like 1.5 to 1. So that was a really, really good trade. That was, in my opinion, that was A+. That was really, really good. Now, I was actually already in a trade. So let's talk about the one that I took, actually. Which was, what I did is I measured this energetic move out. So a lot of time you want to use the most energetic price leg to measure out premium and discount. So from this low to this high. So you can see this 15-minute fair value gap was in discount. So I like this 15-minute fair value gap to frame a model off of. So I was looking at this 15-minute fair value gap. 15-minute aligns with the 1 minute. And we end up getting SMT here. And I think that was the SMT that I saw. And then we aggressively get displacement up, get a 1 minute change state delivery. So I was like, okay, I'll enter on the retest of this. Here's the thing, guys. Do I think this trade was terrible? No, I think it was decent. But would I have preferred to take this 1 minute inversion? This, in my opinion, this trade right here, this has got to be like a 98% probability trade right here. This, it's decent, but I'm not seeing this work every single time, right? This is one where it's like, oh yeah, I framed the model, a decent looking model. We had good accumulation, you know, but like I could have seen this fail, right? And in hindsight, I'm looking at this and I'm like, even though this won, so what I did is I targeted 1 to 1. I targeted the first standard deviation. Even though this one, I'm kind of just like, so you can see how this first standard deviation aligned with this high here perfectly. So this ended up winning. This was 1-1. Even though this won, I'm reflecting and I'm being honest with myself. Like, was this the best trade in the world, right? To be honest, I genuinely think I'm not going to take this next time just because it could have been more obvious, and just because of liquidity. Like, I just think, at this point, there's more liquidity in this consolidation below down here, and then that's obviously why the market continued lower. So you just have to think about the market in terms of liquidity. When you're wrong, it's almost always because of liquidity, and because you had the wrong drawn liquidity, not because you don't know how to trade, but because you literally just had the drawn liquidity wrong. That's usually always why. Like, for instance, with this 3-minute inversion, guys, this is pretty cool. This when this 3-minute inverses, what actually is going on is this is a 15-minute, 1-minute model, right? We have 1-minute change state delivery, and then if I measure this out here, you can see we go right to the fourth standard deviation. So we have relatively equal lows down here. So accumulation, and then we sweep out this high, manipulation, and then we get the other side of the curve here, right? So we hit this change state delivery, and we go right to the fourth standard deviation. So the way this trade would look is, now there's not really a 15-minute key level because we're at all-time highs, but I can still tell this is a sell model, right? Even though we don't have the higher time frame key level, it's obvious that this is accumulation, manipulation, distribution. So 1-minute change state delivery, and then right here was the second standard deviation, right? If I remeasure this out, you can see that right here was the second standard deviation. So that's pretty cool. But yeah, this is how I would frame this, and you can. I put the stop loss wherever I measured the standard deviations from. If I measured it from the body, then I'll put it there. But sometimes, if I measure it from the wick, then I'll put the stop loss at the wick. So just so the standard deviations line up with the RR. That's just how I do it. And sometimes I'll measure it out from the body, sometimes the wick, just depending on how it looks. Now, yeah, like I said, accumulation, manipulation, and then distribution here. And you can see we go right down to that fourth standard deviation. So that's honestly it's really just cool how it does this, right? Market knows that that's going to be a giant liquidity pool. And you can see it's exactly what happens. And as well, this is, well, I don't know for sure, but I was thinking maybe this could be a 2022 model, but I'm actually not going to say if that is for sure. But it might be, because I think this could be a 2022 gap, because sweep, break of structure. I'm just not convinced that maybe this isn't a break of structure. I'm not sure, so I'm just going to not comment on that. Okay, once again, guys, I'm still getting better at 2022 models. Now, yeah, see, here's this model in more depth, right? Accumulation, manipulation, distribution. And then, the other thing that's cool about this, this was better taken. On the 15-minute, right, we hit the second standard deviation perfectly, and oh. And so you can see once again, if you measure out this candle body from the low to the high, we hit OTE of that perfectly. So if you took this as an OTE entry, you can see you go right from OTE down to the second standard deviation. So once again, very cool observation. But yeah, just from a liquidity point of view, this giant consolidation with London and Asia's lows were just clearly too strong, and the market gravitated down towards those lows. Even though we were at all-time highs, and typically you don't see the market retrace like this, you just have to adapt if the market's telling you that it does want to go to this liquidity pool instead, and that's exactly what happened. So let's see. There was, yeah, you see this is a giant sell model, right? Accumulation, 15-minute change state delivery, down. But yeah, giant sell model. And most other people just didn't see much today. Like if I go over on Twitter, you can see a Moss, no setup, no trade today. Yeah, so I'm giving you guys way more sauce than everyone else is. So, but yeah, like I said, giant sell model, and the trade of the day was that 1 minute inversion. Man, that was beautiful. And once again, the reason I didn't take this 3 minute is because I wanted the 5 minute to inverse, and we were a little too far in premium, and it didn't make sense because of liquidity. So that's why I didn't take this. And then I did take a winning trade today. It was that flow state, but do I give it a post-trade approval? I'm actually going to say no because it could have been more obvious. So with that, I think I'm going to end the video here. Hope you guys enjoyed. Hope you found it helpful. And I will see you guys in the next one. Oh, if you made it to the end of this video, comment OTE. Comment OTE. All right, I'll see you guys later. Peace out.